That's a stop. Bubbling back there.
We're going too fast. We're going to sink, Angel. Lloyd has been stopped the boat.
Hang on, darling. This is all right. Hang on tight.
There's no other way of flowing. Which direction we are going? There's no knowing where we're going, or which way the river's flowing. Is it raining? Is it snowing? Is a hurricane blowing? Not a speck of light is showing, so the danger looks like growing. Are the fires of hell a-glowing? Is the grizzly reaper mowing? Yes, the danger must be growing, but the rowers keep on rowing. And they're certainly not showing any signs that they are flowing.
Bunker, has he gone far enough? Wait, sir. Stop the boat.
Welcome Bitcoin friends, it's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and we'll also take a look at market Cipher. So apologize for the delay in the videos. There was a medical issue with a family member over the past few days. I did actually make a video yesterday, but when I exported it out of the editing program, the audio was corrupted on it. So unfortunately I have to remake that video again today. Let's get straight into the charts. This is the US stock market chart, the S&P 500 futures, and we have been watching some key levels here, looking for a bounce in this area. We are on the weekly time frame. We did have an order block here from this red candle in an uptrend. These order blocks are areas of supply and demand. It's a break in a trend. Time was spent here and therefore volume. And these areas can become of interest later on when we interact with them. They can act as support or resistance levels. So we did have this order block here and also one further down from this red candle in an uptrend. And we can see that there was a volume in this area. This is the VPVR, the amount of volume traded at certain price levels. We also noted there's the golden pocket here, taking it from this low to this high. So there was some confluence with this area. We do also have a trend line just connecting the lows here. However, I'm not putting as much on this trend line as we like to see the second touch point with a bit of a gap on a pullback. And these touch points are quite close together. I was expecting a bounce here for the stock market. And currently we can see we did wick into the golden pocket here briefly. And so far for this weekly candle, we have seen a bounce. So we do want to see this candle close green for the week and hopefully get some momentum with a few weekly green candles. Now, next week on the 13th of September, they will announce the new inflation numbers in the US. So that's going to have an effect on the stock market. And I believe a week later, they will announce the new interest rates. And if the inflation numbers do come down, it might give some confidence on the stock market and we might see a bit more of a bounce here, which would also be good for Bitcoin. Now, I do think inflation will come down again on the next reading. And I'm basing that on this chart here, which we mentioned in a previous video. This is inflation in yellow here on the line chart. We're on the monthly time frame, and in red we have oil. And oil is a big part of the inflation numbers. And in the previous videos, we did notice a pattern with oil and inflation. And just looking back here at previous times where we saw a drop in oil and also inflation back in 2020 here, just before the stock market crash. We saw oil in red here, it was at $60 per barrel, and it did end up dropping down to $20. And also inflation here went from 2.5% down to 0%. But what we noticed was a correlation here. When oil dropped significantly, we did notice that inflation also dropped significantly, and there was about a 1 to 2 month delay. But we can see here it was pretty much a 2-month delay, and then we saw inflation drop in a similar fashion to oil prices. Looking back at another example here, back in 2014, again, we saw oil in red start dropping here quite significantly from $105 per barrel down to $50 per barrel. And again, we saw inflation drop from about 1.6% down to negative 0.2%. And again, about a 1 month delay in following that trend. Looking back at 2008, again, we saw oil drop from $140 per barrel down to $40. And we see 1 month later, inflation peaked out here also and started dropping significantly from about 5.5% down to negative 2%. And there's lots of examples here. We did go through them in a previous video. Here is 1991 and also 1986. So looking at our current price action here, we see oil did peak out at about $114 and it has dropped significantly down to $83. When I made that video looking at this chart the first time was on the 25th of August. And I did actually mark with this white line where the oil price was. So it was at $92 back then. We have seen it continue to drop. So we see about a month after oil peaked here, inflation also peaked for the time being, and it dropped from 9.1% down to 8.5%. So looking at those previous patterns, I do expect the next inflation numbers to also come down following that oil price. What we can do is, it seems like there was a 1 month delay there between that correlation. We can actually copy this trend, move it across 1 month, and copy it again and move it across 2 months, and we get a bit of a range here. And I think inflation will follow this downward pattern similar to oil, and that would put our next inflation numbers somewhere around 7.3% to 7.9%. So we'll see if that plays out. We do have the inflation numbers coming out on the 13th of September. And over to Bitcoin now. This is on the 2-week time frame. We do open a new 2-week candle at the start of next week. What we can see looking at this overall range here is we are currently in the area where we do have some VPVR support. A lot of volume has been traded here. We also know if we just mark out the all-time high from the 2017 bull run and also where the bodies of the candles are here on the 2-week time frame, we are pretty much in that range here between 19.1k and 19.8k. And we'll have to see how this candle closes, if we can get a rally before the end of the 2-week. But depending on the close, we could make some bullish divergence on the 2-week here. If we do close below 19,292, we will have lower lows on the bodies of the candles, while making higher lows on the RSI, and this would be a bullish divergence. And just looking at the weekly time frame now, we see a similar thing. If we do close below 19,292, we'd also have bullish divergence on the weekly time frame, with lower lows on the bodies of the candles, higher lows on the RSI. And just looking at the VPVR on the weekly time frame, this time with a bit more resolution, where we have more bars at more price levels. We can see that big spike on the VPVR pretty much in the area where we're at currently. And we notice there was more volume here than these previous spikes, which takes account of all this price action here and the bull run and the bear market. So a lot of volume has traded hands here. Some of it was from this area when we initially tried to break the 2017 all-time high at 20k, and the rest is from this area. But it is significant that we have a lot of volume in this area compared to these previous volume spikes. And just to show you side by side here, the VPVR, this is our current price action over the last few months. This is the initial run up at the end of 2020. We can see a lot of the volume on the VPVR comes from when we were in this range in 2020. And this volume kicks in pretty much where this volume starts to drop off. So we have been dipping into this support zone of the previous price action and order blocks. And they have been acting as support on all these wicks for the time being. And if we just zoom in on that to make it a bit more clearer, we can see that spike on the VPVR where we are currently. We're currently sitting at about 19,180. We see the biggest spike on the VPVR at 19.2k. We do also have some weekly order blocks here from both of these red candles in an uptrend. We can see we are currently inside this weekly order block. And it'll be key for us to try to close at least inside this order block or above it at the end of the week. And to do that, we would need to close above 19,165 to close above the bottom of the order block. To close above the order block, we need to close above 19,380. Do have another order block further down, and that one's at 18.4k to around 18.2k approximately. Can see this order block acted as support on the initial pullback here, so will be interesting to see how we close this weekly candle. We are still in this macro falling wedge pattern from our all-time high, but we can see we have filled out a lot of this space, and we are getting closer and closer to this trend line. If we stayed at this price level, we'd be meeting this trend line at the start of October. Now I want to pull up some moving averages. This is the 50-week moving average in yellow and 100-week moving average in orange. We can see they're about to cross. Basically, this just means that over the past 50 weeks, the average price is the same as over the past 100 weeks. That price is at 38.5k. But I'm pointing this out because I just want to look back at previous bear markets when we did get this cross. And just looking back at 2018 here, we can see we got this cross down at this level. The bottom was already in. We made a higher low. We got that cross on the 50 and the 100-week moving average. And then once we broke that 50-week moving average, we pretty much started the bull run. Looking back at the 2014-15 bear market, which does look a bit more similar to our current bear market, we did bottom out on this candle with this wick. We did make a double bottom, depending on what chart you look at. But looking at the 50-week crossing the 100-week here, that occurred around this area. And it does seem quite similar to our current price action. If 17.5k was the bottom, we had that rally to 25k. Then we have had this pullback to 18.6k approximately. And now we are pretty much getting this cross with the 50-week and the 100-week moving average. And if we are to do a similar thing, we could still spend many months here in this range with our current price action between 17k and 25k before we eventually start the next bull run. And now looking at the total crypto market cap, we have been watching this yellow rectangle here. It just encapsulates the range here. On our initial run up here on the bull run, we spent several weeks here consolidating. And I mentioned previously, I think we're going to spend some time in this range, in this yellow box. We did get resistance near the top and we have come back down. Looking at the VPVR, we see a similar thing. We do have a spike where our current price action is. And unlike the Bitcoin spot price chart, we are still getting supported on the 200-week moving average in red here. And we can see we did wick down close to it on the current weekly candle. But I want to point out two other things. We do have a weekly order block here with this blue rectangle from this green candle in a downtrend. And also we have this golden pocket, taking it from the low to the high. And on this chart, unlike the Bitcoin spot price chart, we are still above that golden pocket, above the 200-week moving average. And this weekly order block has acted as support for the time being. But down to the daily time frame now for Bitcoin. And just looking at the price action over the last 3 months here, we were watching this falling wedge pattern here. We had 2 touches on the top, 2 on the bottom, and then we did break on the 3rd touch. We pretty much broke out of this in a sideways action. And then we did form this triangle pattern in yellow. This is better to look at this on the 4-hour time frame. So just going down to the 4-hour time frame now, we have that yellow triangle. And we did end up breaking bearish out of that. And just looking at the measured move, we take the second touch point. This is the first touch point, the second touch point, and we do alternating ones. And the measured move is the width of that triangle. We put it at the breakout, and we see that measured move took us down to around 18.6k, and we wicked slightly lower down to 18,550. So we did play out that measured move. But we did also come down to the trend line here of this falling wedge. And we pretty much touched it exactly here. So it was a bit of a retest of this falling wedge pattern. And now we have seen this bounce. I think we are seeing this bounce also because if we do look at the RSI, what we can see is we did have triple bullish divergence on the 4-hour time frame. We see successive higher lows on the RSI. While making lower lows on the price action. So can we see Bitcoin possibly come back into this triangle pattern? We'll have to see if it does get up here. It might get some resistance at this trend line. One of the key things we need to get above is the EMA ribbon on the 4-hour time frame. You can see how much it acted as a resistance on all these attempts to push higher here. And currently we have bounced back into it. We are getting rejected on most of these candles. If we are able to get above this ribbon, that would be more of a bullish sign, saying we might have a bit more momentum on the upside. But back to the daily time frame now. Another thing to note is we did have bullish divergence here on the daily, just between these 2 points. Lower lows on the price action, higher lows on the RSI. Along with that triple bullish divergence on the 4-hour, we did see this bounce. And there is also bullish divergence looking at this whole price action over the last 3 months. We did make a lower low on the daily compared to this low, and we see we made higher lows on the RSI. The other thing to note here is we did have a daily order block here. We pretty much wicked to the top of this order block and then played out this bounce. And this order block actually comes from all the way back in our initial run up at the end of 2020 here. Comes from this green candle in a downtrend. And there are actually a few order blocks on the 2-day and the 3-day time frame. And just to show you some of those, we're on the daily currently. There's that daily order block in the blue we bounced off. We also have the weekly order blocks in white here. But if we switch to the 2-day time frame, there is quite a thin order block here. We have to zoom in quite a bit. There's this order block in orange is a 2-day order block. We did close above this 2-day order block when this 2-day candle closed yesterday. And we have one more day left on this 2-day candle. This order block is between 19,160 and 19,180 approximately. Again, there's one more day left on this candle. And this order block also comes from that area back in 2020 here. We can see from this green candle in a downtrend on the 2-day time frame. And switching to the 3-day time frame, this is still the end of 2020 here. Where you can see we have a 3-day order block from this green candle in an uptrend. I've just marked that out with this green rectangle. And just zooming into our current price action again, we can see that 3-day order block in green here. And what we notice is on this drop here, on this 3-day candle, we did actually close above this order block. So that is a good sign. We are still holding this 3-day order block. This current 3-day candle still has another day left on it. The new 3-day candle opens on the 10th of September. To close above the order block, we need to close above 18,780. To hold the order block, we need to close above 18,670. So just a good way to look at all of these order blocks together here. We're back on the daily time frame. So the 2-day order block will close at the end of this rectangle here, and the 3-day on the same day at the end of this rectangle. And then the weekly will close with the new one opening, where these two white rectangles start. And again, we would like to see us close at least inside or above this weekly order block, above 19,170, or even better, above 19,380. Onto the Bitcoin CME futures chart now. This chart is a little bit different to the spot price chart. We can actually see we did make a lower low on the futures chart. Of course, futures was closed when we dropped to 17.6K, so the futures only came down to 18.5K here. But we did on the previous day candle here come down and make a lower low overall. So if you are looking at the Wyckoff patterns, perhaps this could be looked at as a spring here. And the futures also has that bullish divergence on the daily. We see higher lows on the RSI while making slightly lower lows on the price action. So there is divergence on both charts on the daily. And as mentioned on that weekly chart on the spot price chart, we're looking for possible bullish divergence with that weekly close. But we could get a heads up on the futures chart here. Futures does, of course, close before the weekend. So there's one more day left on the futures chart. We are currently on the weekly. We are currently making lower lows with the bodies of the candles while making higher lows on the RSI. So for us to get that bullish divergence, we need to close below 19,270 on the futures chart. And then that bullish divergence will be locked in. And again, there's one more day of trading on the futures chart. And over to Market Cipher now. We're on the 4-hour time frame. This is that falling wedge pattern we broke sideways out of. We had that drop and retested it. Have a daily order block in blue here. These are some of the weekly order blocks higher up. But we did get this green dot here. It did get confirmed. We have been moving up since then. It does look like it wants to print a red dot here. And if it does, I think we'll probably come back down, look for a higher low or possibly some bullish divergence on the 4-hour time frame. But we do have to wait for that red dot to appear and get confirmed first. The main thing we're watching on the 4-hour was this money flow in red. We're looking for it to come back into the green. And if we can do that, it would give confidence on more of a move to the upside. We did get quite close here. I thought we were going to break into the green, and we did have this big drop back down. We did also have these blood diamonds printing here. They can preempt a big drop coming. This one didn't do much here, but when they do build up like this, it is more significant, and we did eventually see that big drop. The 6-hour time frame also got a major green dot that got confirmed here. Money flow is still deep in the red though. And the 12-hour also got a green dot here, and it has been confirmed. That is a good sign. We see the 2 previous green dots here on the 12-hour. It did go a little bit higher, but it was pretty much sideways action. So at the very least, I think we're going to have some sideways action here for a while. And if that 4-hour can eventually come into the green money flow, perhaps we'll see a bit more momentum with this 12-hour green dot. We did also have these yellow X's on the 12-hour time frame. These indicate manipulation. So the price was trying to be pushed down here. And again, getting multiple ones here makes them more significant. It doesn't always play out as much as the blood diamonds. I do put more emphasis on the blood diamonds. But just looking back at the previous bear markets and those yellow X's on the 12-hour time frame, if we look back at the 2018 bear market here, we can see at the bottom here, we did get a couple of yellow X's together. We had a bit of a drop, but this was actually the bottom of the bear market. The one that's interesting is the 2014-15 bear market. And again, we're on the 12-hour time frame. I do think this bear market looks more similar to our current bear market, the way we've been zigzagging down. And if we were doing a similar thing, this is possibly that 17.5k low, the bounce to 25k, and now the pullback. And what's interesting about this is we also had 3 yellow X's here all close together. We did see a drop eventually here. We made a low. We spent a fair bit of time going sideways. And then we did have another run up towards the previous high here. So if we're doing a similar thing, this would mean we go back to 25k at some time. Perhaps we have one more drop back down. I'm not sure what happened here at the time. Perhaps there was some news that caused this big drop. It was quite quick and sudden and got brought back up. But that did form that double bottom, and then we did start the next bull run. So we could be in a similar area to here with our current bottoming action. But also what's interesting is where these 3 crosses are, and postulating that we're in a similar position with those 3 crosses, is this is the exact point where that 50-week and 200-week moving average was crossing, similar to with our current price, and those 2 crossing there also. And just to show that again, we can see this is the bottom of 2014-15 bear market. We had that bounce, we got that pullback. Those 3 yellow crosses on the 12-hour appeared here. We had that cross between the 50-week and the 100-week moving average. With our current price action, just zooming in, we can also see we came down to the low here. We had this rally, we came back down. Those 3 yellow crosses appeared around this area, and we also have that cross between the 50-week and the 100-week moving average. So just an interesting observation. And in fact, if we were to overlay that 2014-15 bear market over our current price action, lining up those 3 crosses, we can see that it does have some similarities where we did go to the low, we had this rally, and now we're having this pullback. And if we are doing a similar thing, it could possibly look something like this, whether we have this one more big pullback here. Perhaps we do something like this where we break sideways out of the falling wedge. Maybe we start the bull run here at this point. Again, doesn't have to be the same, but there are a lot of similarities here. And I am going to make in my next video a bigger comparison between the 2 bear markets there and spend some time looking at that in more detail. But onto the daily time frame now. We can see we got that red dot on the daily. It did get confirmed. Now we're looking for hopefully a green dot soon here. We are quite low already with this blue wave. So if we can get another green dot, then perhaps we get more of a bounce here. And the 2-day almost had a green dot here, and then we did have that drop. So it didn't get confirmed, and now we're looking also for that 2-day green dot. And the 3-day is similar. The blue wave has been coming down. We're also looking for that 3-day green dot. The next 3-day candle's on the 10th of September. So I think we need to see these green dots build up again on the 1-day, 2-day, 3-day, 4-day, and so on. And if we can get them all appearing within a 1 or 2 week period together, it would give us a lot of momentum to start pushing higher, perhaps coming back up to that 25k area. And going on to the weekly time frame, we did get this red dot. It did get confirmed. And a similar thing, we're coming down here. We want to see another green dot. And we need to see it build up on those smaller time frames towards the weekly time frame. And again, just looking at the 2014-15 bear market low here, this was the double bottom low. Keeping up with our comparison, we did get this weekly green dot here. Then we got the red dot. We had this pullback down. We're looking, as we said, with our current price action for that next green dot. We did have green, red, green here. But once we did get that one confirmed, we moved back up to that 25k area. So it does seem very similar that we're perhaps in this area if we are doing a similar thing. And we can see that with overlapping it again here. We got that red dot. We started coming down after that rally. And now we're looking for a green dot on the other end to do a similar thing. Perhaps we go sideways, and then that second green dot gives us the next rally to 25k. And finally, the 2-week time frame, we got that major 2-week green dot, which in previous bear markets did confirm that the previous macro low was the bottom of the bear market. We saw it here with this major 2-week green dot, and also that was the low. And interestingly, it was on this initial run up here after that low. Keeping up with our comparison, we got that major 2-week green dot after that initial run up from the low. So very similar to 2014-15 bear market. And we also got it in the 2018 bear market here. It appeared on this area, and the previous low was the bottom of the bear market. But I think that's about all. Hope you enjoyed that analysis in the short-term time frame here. The main thing we need to watch is this 4-hour EMA ribbon acting as resistance. Possibly we get pushed back down, make a higher low, or look for bullish divergence on the 4-hour with the RSI. Or if we do end up pushing through this ribbon and closing above it, back above around 19.7k. Of course, this is coming down with each candle. And we could possibly see some more bullish action. Perhaps we come to the top of the ribbon and get rejected off this trend line and then come down for maybe a higher low. We'll have to see how that plays out going in towards the end of the week. And again, on the 13th of September, we have the inflation numbers come out. So I think next week will be quite an interesting week, seeing how the stock market responds and also Bitcoin. So thanks for watching. I'm Bitcoin Mamo. I'll see you next time. Bye.